All right, we'll get started here. Hi, everyone. I'm Francesco, and I'm part of the investor relations team here at IotaComm. And we're super excited to host the webinar today to share some of the recent partnerships and IOTA Spectrum Partners acquisition that's happened over the past couple months, specifically how it's created value for the company and how it plays into our long-term strategy of increasing shareholder value. Terrence DeFranco, our CEO, is going to present for about 15 minutes, and then there'll be a Q&A shortly after. You'll see a little Q&A chat bot at the bottom right hand of your screen. You could put questions in there throughout the presentation, and we'll get to all of them. If we do somehow miss one of your questions, you can email us at investors@iotacom.com. With that, I'll hand it over to Terrence to start the presentation.
Great. Thanks, Francesco. And thank you, everyone, for joining our webinar. We're in the middle of summer, so thank you for taking the time. It's typically a very busy time for everyone. We're also scheduled this one for the middle of the afternoon. Figured it was a good time for everybody to be able to make it. We're at a really great point in our business right now. First thing, I think we have a number of our existing investors that have also come on the webinar, as well as some folks that have already participated in our crowdfunding. The crowdfunding's been going very well. And so thank you all for joining. I know some of my team, maybe some of my board members are also on the call as well. So welcome to everyone. I want to start by maybe setting a little bit of context. As we are now transitioning the company into more of a growth and scale mode, really try to think about the context of the things that we're doing. As the CEO overseeing a company that was really grinding through an early bootstrap phase of the business, now starting to, as we make this transition, really starting to look at the type of impact that a company like ours can make. And I mentioned this on one of the interviews I did recently, and I really like this analogy. When you look at infrastructure investments that have been made just over the last 100 years or so, going back to the railroads, and the economic opportunity that was created in that infrastructure investment. Now people can move a lot quicker from point A to point B. Investments in the interstate highway system in the 1950s and 60s. And so how that new infrastructure investment really had tremendous economic benefits. Move into the 1990s and the early 2000s, now with the advent of wireless communication and the internet. And again, just think of the humongous impact that was made by these infrastructure investments. And so what IotaComm represents in that whole string of those advancements is really the next layer around wireless communication. Kind of think of us in the context of wireless communication in particular. Broadband cellular has been terrific. I mean, the things that we can do now on mobile devices, or we could never really even think about doing 15, 20 years ago. Well, what we represent is really the complement to those advancements. So as broadband wireless has continued to evolve over multiple generations, we're now in 5G, eventually 6G will be coming. What IotaComm represents is really a great complement to that. Maybe using that highway analogy, where broadband spectrum is more of those interstate highways, but those interstate highways really wouldn't be delivering as much economic value if there weren't also the side roads, the smaller highways, the local roads that ultimately connected those destinations that were kind of off of that broadband path. And that's really what we're looking to build. It's that next generation of connectivity that's going to layer in digitalization across all the areas where cellular, Wi-Fi, and Bluetooth have really not been able to penetrate effectively. So as I walk you through our presentation, some of this is going to be update. If you've been on prior town halls and discussions and been following, some of it's going to be a little bit of a repeat for you. But I want to be respectful to some of our new journeymen, if you will. I'll also, though, for everyone, get into some critical updates in a few minutes here. So I'm going to go into presentation mode here, and I'm going to start off by just kind of giving you a more overview of the business. And so if you're not familiar with us, company was founded in 2018. We currently have a location, and we've been grounded in Pennsylvania. I'm currently sitting in Pennsylvania, but as you might have seen, a recent announcement, we've relocated the headquarters of the company in North Carolina. I'll be getting into a little bit more detail about that later. The company has designed off of that connectivity an Internet of Things platform. So Internet of Things is exactly as the name suggests, really connecting and digitalizing things, allowing them to be connected to the internet on a wireless network we feel is built specifically for that. The focus for this, though, is more on commercial and industrial applications. We as consumers are surrounded by all kinds of connectivity, whether that's Wi-Fi in our house or our cellular phones. But when you start getting into areas where digitalization really hasn't been able to flourish because of a lack of connectivity, that's really where the focus is. So our business is you could think of this as a B2B business, really don't focus on consumer applications. So the platform is focused on really creating what we call these smart spaces and smart territories. And it really goes well beyond just thinking, when we say smart spaces, we're basically talking about buildings, but we're also talking about the environment totally around the buildings as well. And in territories, we're talking pretty much about smart city applications. And the idea is really putting together what we do best as a capability on the connectivity side with all of these new emerging opportunities that are coming around the data that we're able to gather. So we're not just connecting and gathering data. IotaComm's business model is actually to take that even further, and we're in the data business as well. So as you hear about all these things, particularly around artificial intelligence, metaverse, which is really gamifying visualization, those types of things, even digital asset strategies, those are things that our business is looking to really capitalize on. So the positioning on being able to get the data is what we're leveraging to try to be in that data business. And so just some highlights, I'll run through these pretty quickly, but I'll be covering them later in the presentation. The foundation of the business is our crown jewel asset, our FCC licensed radio spectrum. The portfolio is worth approximately $100 million. And beyond its financial value, it really creates a tremendous value from a strategic control standpoint. So as a connectivity business, just think of Verizon or AT&T, Charter Communications, Comcast, anyone that's in the wireless communication business, the core of their business is FCC licensed radio spectrum. The spectrum that we own does carry many of those same properties and allows us, as this early stage company, we're very, very fortunate. It took a long time and a lot of money to aggregate, but at this point in time, not only do we have this base value that I mentioned at 100 million, but as we start growing our business and driving more revenue, you can expect that the asset value just for our spectrum will continue to increase over time. So what we've done is taken that asset and now we move into creating the commercialization around it. And so this is where we get into the wireless connectivity aspect of it, the data analytics, the AI and metaverse. So as an investor in our company, you're not just investing in spectrum, you're investing in a company that's really at the forefront of both telecommunications as well as these other data-driven business models. Business model is a very flexible one. So this is when we price our solutions, they are subscriptions. And so typically companies that have revenue models based on subscription models typically garner very, very high valuations. And so we take that bundle of that communications and data, et cetera, and we bundle that all into essentially what looks like a SaaS model. So it's a subscription-based model that we deliver to our customers. That's great for you as investors, very high margin, recurring revenue. Also, when we're able to manage our churn rate and keep that low, those are really great revenue drivers for us and tend to be very, very profitable. On the customer side, though, it's not just about our ability to capitalize. In a subscription model, customers are able to obtain value from the solution while they're paying for it. So the antithesis of that is a large capital expenditure up front, so where the customer actually has to buy a solution, a full bundle up front, and then hope to realize value over a period of time. in a subscription model, they're realizing value as they're paying for it. So it's very friendly for our investors, but also very, very friendly for our customers. The markets that we're going into, this whole area around smart buildings, smart cities, these are massive markets, and especially the areas that we're going into. I'll talk a little bit about market size, but they're still fairly nascent, but there's a monster opportunity out there for us. Meaning that if we get it right and we establish ourselves as a leader, there's a huge opportunity for us on the other side of it as our company continues to grow. Next thing is our management team. I wouldn't be here if it wasn't for the wonderful team that I'm surrounded by. Very, very thankful for their willingness. Very thankful for their willingness to continue to contribute and work with a strong sense of purpose, ultimately aligned with our shareholders on how to drive value. So I could guarantee you that every one of our employees isn't here just to collect a paycheck or put time in. They're very aligned with our shareholders and operating with a sense of purpose. And part of our business model, we could say, all right, we have all these great things, but I don't know why this presentation is moving. Excuse me, I'm sorry. But without key partnerships and an ability to scale, we really would be a very slow grower and seeing a lot of those opportunities, more foregone opportunities. So the key is actually taking all of the things I just went through and now bundling those into strategic partnerships that allow us to scale the business. And I'll be getting into some updates there. All right, so as this thing was kind of had a little mind of its own there, jumping from slide to slide. Sorry for that. So I want to begin by kind of laying out what really is the whole problem that we're addressing. And I like to refer to this as the 3 C's. When you're talking about the implementation of new technologies and really taking advantage of what digitalization promises for all of us, when you think about your own life, how being connected has created so much value. Just think of those times when you don't have cell coverage, or if you're driving somewhere and your maps application isn't working. We've really become so accustomed to having those technologies at our fingertips. But when you get into these commercial environments, they don't exist. It's very, very difficult. And one of those impediments is cost. There's definitely a cost element associated with what I was saying before about that large CapEx up front. But the other piece is really trying to figure out, if I'm going to lay out this money, what is that tangible ROI that I'm going to receive from it? And so these impediments have really been difficult for players in the market to try to overcome. And what's ultimately happened is that the markets really haven't adopted them. There's a cost barrier that's really prohibited this adoption. The second one around complexity. So think about these large organizations that want to implement new technologies to try to improve. Well, most of them have existing legacy systems, and you don't want to create now some other siloed aspect of your operations. You don't want to have to now hire additional people that have the expertise to operate that system. And so this complexity of being able to layer in new technology, especially where there already is legacy technology, it adds to the cost, but it also adds to the inability for these companies to really fold it into a near-term and long-term strategy. The final one is culture. And I'd say that cost and complexity can be overcome. Culture is probably the hardest one. And so this is really about organizations. Do they have a culture around adopting new technologies? And so just think of that person that you might know, still has a flip phone, maybe still has kind of the clicker remote for the TV. They're like, okay, this is good. I'm good with the way this works. I'm fine. Some of you in the audience might actually be those people. Nothing wrong with it. But when we're trying to sell technologies for digitalizing organizations in those spaces and cities, the culture of the buyer is really critical. And so we're starting to see things happen a little bit more quickly now, and culture a lot of times is more a function of education. Think about artificial intelligence. We're in a place right now where I would say probably, half of the public thinks that it's bad for us and half the public thinks it's good for us. Well, that half that thinks it's bad, that's a culture aspect. So adoption of new technology is really something that, as we think about our go-to-market strategy, we have to address. So how do we do that? Number one, focus on profitability. We're selling into organizations. We need to demonstrate a tangible return on investment. And that's why I go back to that SaaS model, the ability to align payment from the customer with return of value to them. That is absolutely critical. So what we envision for our customer in our presentation, part of the value proposition, is you will realize value immediately up front. And that is where we're aligned on how they're paying. And that value is realized over the life of a subscription. And frankly, it accumulates and grows as time goes on. So keen focus on increasing profitability with a tangible return on investment is one of the great ways to overcome those problems. The second one is that there's been a tremendous increase recently in focusing going beyond just simply OSHA and employee health and safety, where we're in a knowledge-based society now more so as well, but there's really a focus on organizations on maintaining, I'm saying here, safety and well-being, healthier and safer. There's a continued striving for constant and continuous improvement in creating safer and healthier environments. There's an investment in people that organizations are realizing, but they're also realizing that actually is part of that increased profitability equation. You do get much more in the way of productivity while keeping your employees healthier and safer. So that's a critical element that we add into our value proposition. And then going back to that culture piece, okay, so adopting new technologies have really been seen as a great value driver from a reputation standpoint. Consumers today really want to understand how the producers of the products they consume, how they do things. And so culture is a big part of that. Being on the cutting edge of innovation is a great reputation builder, and it's a great way for organizations to actually develop that culture internally. I could speak firsthand. Part of our culture is all around innovation, and it certainly is a great reputation builder for us, but it is also a great value driver for us as well. So I mentioned before that the markets that we are entering are both nascent but projected to be substantial. And so this type of connectivity I was describing in the beginning, I was saying that it's not broadband, but a complement to broadband. Well, this is called low power wide area networks. Think of it as narrowband. Okay, so our frequencies don't have the ability to transmit large amounts of data at one time. These are more smaller packets, but we have some superpowers that allow us to have some really attractive trade-offs, and I'll get to those in a second. So this low power wide area network market opportunity, again, like I said, it's fairly small now, around 20 billion in global market size, but as you can see, projected to reach 120 billion in the next few years, and surpassing a quarter of a trillion within the next business cycle. And so what's driving it? There's this constant thirst for more and more data. Okay, so as these business models do start getting adopted, as artificial intelligence is adopted, as all these digital twins and simulation technologies, you need data. And any way that they can get data at a lower cost and high quality, that's really been the big driver. So just, when you think about why would this type of connectivity have so much demand and so much growth, it really is about that complementary nature that it has next to the growth of broadband. Broadband going from 3G to 4G to 5G to 6G, et cetera, is tremendous growth, but alongside it, it's not bringing the same capabilities that low power wide area network does. And so frankly, the growth in all connectivity is great for the markets that we're entering. So for the folks who've been on my town halls and presentations for the last 7 years, you've seen this slide for 7 years. So please bear with me. For folks that are newer, this is our strategy. It's been our strategy from the beginning. Maybe for the folks that have seen this from me before and are familiar with it, maybe you'll hear something new out of what I'm talking about. So the way that our strategy is laid out is essentially that we've got this very, very valuable asset, our spectrum, that's over here on the left, this network connectivity piece. We complement that as a company with some core capabilities. And this is essentially the technology and the know-how around the asset. So just think, a lot of times I'll use an analogy of a chef, right? A chef has groceries that are in the refrigerator. And then you take that chef's capabilities and what they're able to do with those things that are in the refrigerator. It's very, very unique in ultimately the value they're able to create. So these things over here on the right side are go-to-market. And so just think of this in terms of this wonderful, very scarce, very valuable asset in our FCC licensed radio spectrum, that amazing team that I have that I just described with their capabilities and the things that we know, the subject matter expertise around understanding connectivity, understanding sensors and gateways, understanding analytics, visualization, cloud services, how we can do APIs and how we can integrate, like all those things that would go into a technology business like that. But the biggest capability is really understanding then how will the market receive these solutions? How are we going to overcome those problems? How are we going to create those solutions in driving return? This is essentially how I look at our business every day. It's all about, and as an investor, please pay close attention to this, because as we announce things and as we continue to progress our business, it's all about these three things: enhancing the value of this asset, continuing to build on that asset, continuing to hone those capabilities of leveraging that asset to create value for customers that ultimately creates value for our shareholders. Okay, so it's assets, capabilities, and then also those applications that drive value for our customers. At the center of this, I'll call it the star of the show, is this dual band outdoor gateway. This is a radio that goes on a high structure. So just think of our connectivity business as you would Verizon. You drive around, you see cell towers with these radios on them. This gateway at the center of this slide is our equivalent that we put on a tower, on a building rooftop, or some high structure to broadcast out a signal that can connect to devices in the field. Using the analogy, your cell phone is that device that's in the field that communicates with that gateway. So this version of it that I'm showing you, the reason I say it's the star of the show is that there is not another device in the world like it. And so what it is capable of doing is it does this low power wide area network connectivity, but we have two versions that are unique to IotaComm. On this right-hand side, where it's operating on 900 megahertz unlicensed frequencies, this is conforming to an existing standard called LoRaWAN. LoRaWAN is the fastest growing, most widely adopted low power wide area network standard in the world. Big mouthful there. Sorry for all the acronyms and all of that. LoRaWAN is the standard. That's the technology. LoRaWAN operates on unlicensed frequencies the same way that your Wi-Fi does in your house. Our gateway is capable of communicating with devices in the field on the standard unlicensed frequencies that happen to be in that area. What's very unique to us is what's happening over here on the left side, and that is our licensed 800 megahertz frequencies. And so our strategy is to have a single dual band radio that's capable of leveraging that LoRaWAN standard to be a leader in that low power wide area network market with both versions, both the unlicensed version and our licensed version. The reason for the dual approach is that there are places across the United States where we don't have spectrum. We have a nationwide portfolio, just like any carrier has a nationwide portfolio, but connectivity still may be lacking in certain areas. The other differentiator is that there are certain applications that would actually run just fine on the unlicensed frequencies. And so when you look at those over here, we talk about energy management, indoor environmental quality, and asset tracking. Those applications would work just fine on the unlicensed version of the standard. Whereas when you start getting more into critical infrastructure, utilities, eventually in healthcare, that carrier grade, low power, wide area network capability is the thing that IotaComm is uniquely positioned to deliver. And like I said, there isn't another LoRaWAN gateway that employs licensed spectrum for this type of communication. So you can see at the bottom of the slide some of those premium services that we're able to deliver as that carrier grade version of the LoRaWAN standard. It truly is a tremendous differentiator for us. And like I said, in our business model, it's the star of the show. Now we move into the data part of our business. And I'm not going to spend a lot of time here because it's pretty standard around the types of applications. So there's cloud services, there's visualization. We have the ability to generate alerts for customers. Right now, our first application, I'll get into a little bit more later, is around indoor air quality. So when we work with customers, this is really where the touch point of all that data is. And so Delphi 360 is the name of the platform, and it's designed to basically accommodate any application within that smart buildings and smart cities realms. And what we do is customize it specifically to the different verticals that we go into. But this is really where all that value from that connectivity is ultimately captured in a state-of-the-art Internet of Things platform for really driving those data-driven insights for our customers. It's really where the value is realized. Sorry, I'm in a conference room where the light's going off. All right, so moving to our business model. How do we make money? I mentioned in the beginning that the business model is around a subscription. We sell indoor air quality as our initial application. We install sensors in buildings, roughly one sensor every 3,500 square feet, but we charge for indoor air quality at a penny per square foot per month. And so going back to that first slide where I was talking about our subscription model and how it's great for customers, how it's great for us, real aligning value with payment is really a great way for us to scale our business in this SaaS model. A penny per square foot to these customers brings tremendous value to them and very, very easy for them to digest. From our standpoint, when you take into account the fact that that includes all of the hardware, all of the connectivity, the deployment, the onboarding, installation, continuous management, delivery of reports, like the whole suite is included in that. We still, when you take into account that even the hardware, we have a blended margin on that bundle, gross margin of at least 60%. Right now, it's falling a little bit more in the 65%. So that includes us installing the connectivity in those buildings. Now, once we get into additional applications, now we're going beyond indoor air quality. Now we're going to start talking about water leak detection or some of the other things that are showing up in this graphic. Those new applications actually demonstrate much higher margin for us. And so the idea is really to try to reduce churn, stay engaged with customers, keep delivering value, keep adding in new applications. We believe that we should become a fixture and a part of the permanent infrastructure in these buildings, the same way that a thermostat is. And so that's one of the wonderfully attractive aspects of our business. You know, we can experience extremely low churn based upon the way that we're positioning ourselves when we first get in. And like I said, the customer value, so that increased profitability aspect of the solution I talked about earlier is all realized from energy cost reduction and pushing toward ESG goals, helping on optimizing around operations. And then when you start throwing in some of these other data capabilities, you really start supercharging their ability to get more value. All right, so now updates. I'm going to start using the logo that I had from before on the connectivity around our asset. Okay, so the first thing is that this past spring, we did a transaction where we had an entity that owned the spectrum that we co-owned with about 600 investors. We've now completed a transaction whereby we issued stock to consolidate that entity into IotaComm. And the benefits for those investors, as well as every shareholder going forward, is that now we have this asset and its value and its increasing value as we drive sales directly on our balance sheet. It also gives us an opportunity to maximize the portfolio for value. When we initially aggregated this portfolio, it was done with the concept that we're going to acquire every license we can everywhere it is, no matter where it is, and no matter how much we had. There is a much more stealth way of managing that portfolio for maximizing value. And so having it directly on our balance sheet and directly under our management is going to allow us to do that. So it really is about making sure that we have spectrum where we need it to support our business, but at the same time also maximizing the value for our investors so that we're very, very efficient on matching both of those, aligning ourselves with our go-to-market, but at the same time maximizing the value and the increasing value of the asset. Second thing is that we entered into a full new agreement with a partner called Crown Castle. They are the largest tower infrastructure company in the United States. They are our partner. And now, as we get into this third bullet here, path to commercialization, we've finished the development of the technology. So that gateway and devices that communicate with that gateway, that development, that technology development has now been done. And we are now in the process, bullet number 4, of establishing the first 35 sites on Crown Castle towers. That star of the show gateway is going on those towers, and the end device that we've developed is communicating with those gateways. And so that establishes the first 35 sites, which will ultimately grow into a nationwide network. I know for our longtime investors, this is what you've been waiting for. This has actually happened. It's time to celebrate. I'm going to use an analogy at the end of the presentation that it's going to crystallize this, but everything that you've invested in, everything that you were waiting for when you own the spectrum, it is now actually happening. Next thing is now focusing on the capability. So back to my slide where I was talking about our strategy. First one was the asset. That's where I was just talking about. Now we're moving to the capabilities. We've rekindled discussions with Semtech. Semtech is a publicly traded semiconductor company. SMTC is their stock symbol. We've re-engaged with them around now future looking. Now that we've completed the technology for commercialization, now we're focused on advancing our R&D activities. And so this relationship with Semtech is absolutely critical for us. I've had the pleasure of meeting with the CEO on 2 occasions, discussing our strategy. Everything I'm explaining to you, I explained to him. And I'm not going to speak for him, but he seemed to really gravitate to the story. There seemed to be a true excitement around what we're doing with this technology very differently than others are. And it really is how we're tethering telecommunications technologies to that data business and solving problems in the market. So you'll hear more about that as that relationship continues to evolve. We've also introduced some new features in Delphi 360. So as we're selling, we're learning. It's definitely a great iterative process. So as we continue to grow our market and get feedback from customers, what we've done is added some new enhancements to include things like advanced analytics enhanced reporting. And we've also built in a knowledge base where our customers can really start learning more about what is, the impact of temperature and fluctuations or humidity, CO2, things like that. So that knowledge base is really a great feature that we added. We announced a partnership with TELUS Network Sensors back in May. I want to bring that up here in the context of expanding capabilities. This is now, they are both a customer for our network, but they are also a sensor that we're looking to actually integrate into Delphi to be able to offer out to our customers. So when I talked about part of our capabilities was understanding sensors, this is absolutely critical. This is a best-in-class air quality sensing from TELUS is now becomes a part of our overall suite. So really, really important on how we expand capabilities, doing partnerships like we did with TELUS, and now with Revert, with Revert Technologies, we just announced this partnership as well. And this is another cutting-edge, very unique hardware sensor company that actually has this unique internet-connected and AI-empowered power outlet that allows customers to be able to have much more control over those power outlets to be able to optimize for energy use. Tremendously exciting opportunity for us just to see it. I love what Revert Technologies, Ryan and his team are doing there because it's really solving a huge problem. Some of our lineage at IotaComm goes back into the energy management space and really understanding what their business model is and how they're going to market. I give them tremendous kudos. But from our capabilities, again, this becomes another opportunity for us to introduce new cutting edge technology to our customers on Delphi. So that's the capabilities. I covered the assets, capabilities, okay? And now going into our go-to-market. So I'm going to come right back again to TELUS and to Revert. This model is one that we want to keep replicating. TELUS and Revert are customers of IotaComm. They have adopted LoRaWAN technology for their communications. So TELUS has outdoor air quality sensors, is really the main thrust of their business. Previously, we're using cellular to connect those outdoor air quality sensors, have now opted to leverage LoRaWAN, and they are now a network customer of ours. We're delivering that LoRaWAN connectivity to them. And the same thing holds true for Revert. So these are now those partnerships, those are customers of ours. And that's why we're very excited as they go to market and as they penetrate their markets. But what we've also been able to do, like I said, is the part of these partnerships is also going to market on Delphi with them as a part of that suite that we're also offering out to our customers. This compounding ability to drive revenue is tremendous for them, it's tremendous for us, and it's tremendous for you as investors in our company. This is the future of our business. The value of our network is going to be driven by the innovation around hardware. That's a really important point that I want you to remember. Think about the iPhone and the impact that it had on AT&T, which was its first carrier. That innovation in hardware drove adoption for wireless communication. We feel that hardware innovation and our ability to try to support companies like TELUS and Revert Technologies as great partners, it's not just about the technology, it's the culture also, great people. But that ability to on-ramp and enable these new hardware, this new innovative hardware is tremendous for our business, both from a revenue generation standpoint, as well as delivering capabilities to our direct customers. There's another opportunity that we're involved in right now with an organization called CWIT. This is a Center of Excellence for Wireless Infrastructure Technology based at Stony Brook University. This is actually how we met Revert Technologies. This is going to end up being a test bed for us for new advanced technologies and hopefully working more with Revert Technologies, but also working with other hardware innovators that are coming out of Stony Brook and the greater New York City metropolitan area. We've also announced recently a partnership with Healthy Green Schools and Colleges, part of the Green School Initiative. And this is a little bit different. So this is more on our go-to-market strategy around indoor air quality and outdoor air quality in K through 12 schools. One of the things that helps us position our solutions as we enter these markets is the subject matter expertise of understanding really how does indoor air quality impact profitability? How does it impact safety and well-being? How does it impact reputation? Aligning ourselves with organizations that are not just advocates for clean air in schools, but also creating certification programs. So what we're able to do is, number one, align culturally, but number two, have access alongside a partner to really evangelizing around the benefits of what we do to that target market. Think of this as alignment to help enhance the credibility of our business and what we're saying to our target markets. We've already seen how these organizations are impacting our sales revenue. I want them to know, if they listen to this webinar, that for us, it's not just simply about the profit. We are culturally aligned with them, and we are as much an evangelist for what they stand for as they are. But at the end of the day, I'm running a business as well. And the ability for us to be able to penetrate a market with the credibility of such wonderful partners is absolutely crucial to us. So when we talk about driving sales, you can see that there are a couple of drivers that are associated with it. And these partnerships are absolutely critical for us. But I'm going to wrap up this slide here by talking about our move to Chapel Hill. So we relocated headquarters there. They've rolled out the red carpet for us. I'm so humbled and honored to be a part of an entire innovation movement, business-friendly movement that's happening in Chapel Hill all around the whole research triangle. You may have seen some of the press that we've been able to get. There was a story that was done for us, but the whole reason wasn't for the red carpet and the flash. It was all about being part of an ecosystem of innovation. It's not just in Chapel Hill. We're in the process now of cultivating partners that are more in Research Triangle Park, closer to Raleigh. We have a partnership right now with the UNC Chapel Hill Business School, Keenan Flagler, as well as the undergraduate school. So a lot of the R&D activities that we want to do around both data as well as the wireless communication is going to be happening there. And as we start to grow our team, that's actually where we'll expect to be adding more and more headcount. Financial projections, and I'll get into this. I think there may have been some questions that were submitted earlier around our revenue, but I don't want to glaze over this. But the thing that I want to point out here is a couple points. Number one, this early part of the growth curves for both revenue and EBITDA represent essentially the state of the company, of where we've come from and where we've been as we are now going to market. The one thing that I think is really important to point out, there's actually two. One of them is here in 2027, and these are fiscal years. Our fiscal year end is May 31st. So in fiscal 2027, what you see here in the revenue curve is a little inflection point here. That's when we're going to start seeing both the extension of those recurring revenue model, SaaS types of subscription sales happening. And then the gap you see here also in this growth and that inflection point also includes the ability to upsell that second application at an 80% gross margin. And so really what you can expect from our business as we're selling now, so we're in the first quarter of fiscal 2026, as we get through the rest of 26, as we get into 2027, that's when you're going to start to see this compounding growth and the steepening of this revenue curve. The second point that I want to point out here is also the crossover of EBITDA into cash flow positive. That number includes our CapEx. Okay, so that is a cash flow number. So you can expect that as we're building out a network and also paying for the operations of our business, that in early 2028, fiscal 2028, which is late 2027, that's when we expect to break into positive EBITDA. The offering that we're doing, this slide is in the portal, the DealMaker portal. So I want to wrap up a little bit here and get into Q&A. But we're selling common stock at $12 per unit. We're raising up to $5 million. We've had some good success. We're actually looking at when we might close off the CF. Look for some announcements coming out soon around the timing of that. But you're investing in a company at a valuation that we think is very, very attractive. There's been over $140 million paid into this company since 2013. So investors coming in today are really coming in right before that inflection point that I was just showing. And so it's really a tremendous time to be looking at investment in the company. And what you have in an early stage company here, and I just want to point this out, it's really important, is the fact that you've got this kind of the safety net of the value of the spectrum that's underlying our investment. It supports our valuation. So consider that as you look at investment in the company. And it's also an investment in a future business. If you're looking for new AI investments, I know if you're trying to do that in the public markets, good luck. You're going to be paying way up. You can invest in a company like IotaComm whose strategy is tethered to the growth of artificial intelligence. And so we really do become much more a data play than we are a telecommunications play. So I'm going to wrap up now and just saying thank you again for attending our webinar. I know I went a little bit over, but we're going to open it up for Q&A right now. And Francesco, I don't know if you're still there, but please, maybe we could jump into the questions and answers right now for a bit.
Yep, of course. Yeah, so we got a bunch of questions submitted. I'll just start. How do you view the exit opportunities for investors in the next few years? What are the top 3 priorities between like now and then for IotaComm to execute?
Exit strategy?
Yeah.
So we're preparing for all options. The company is its audits are qualify for us to register as with the SEC, and so it's called PCAOB. The audits as we do them, and we're in the middle of our year-end audit right now, would allow us to leverage those for an IPO. So we're always ready. We have all the other qualifications for NASDAQ or New York Stock Exchange listing. The thing that is preventing us from doing so is really the state of the markets. The market really has not been very friendly to early stage growth companies like ours for the past several years. And so it really is about market conditions. The board makes this decision around an IPO based on what's ultimately best for our shareholders. If we're truly going to represent it as an exit strategy, well, we have to have the fundamentals that support full liquidity in the market, right? So you can't have somebody that's going to go and sell 10,000 shares and the stock moves because of that. So we want to make sure that it's a value creator for our shareholders. But again, we're prepared for it whenever the time makes sense for driving value. These partnerships and discussions that we're having, those are both strategic investment discussions as well as potential exit strategy discussions. I think that over the remainder of this fiscal year, which will end next May, I think we're going to make tremendous headway in that regard. What that looks like initially probably is a direct investment first before an ultimate sale. Just to summarize, we keep every option on the table. We're trying to look at every part of an exit strategy in terms of driving value for our shareholders. We also have shareholders that have been in the company for 12 years plus. And so we have to take into account the fact that we have investors that have essentially been locked in this private company investment for a long period of time. So we have to be sensitive to those investors as well. So all of it's in the interest of them. But I do think that over the course of just these next 3, 6, 9 months, things will start getting a little clearer for us around what potential exit strategy makes most sense for us and when.
Okay. Yeah. The follow-up to that was, what are the company's top 3 priorities between now and then?
Grow our sales. We're in a process also of firming up everything on a technology standpoint, grow our markets around connectivity, all of the above. Everything that was in that strategy slide, the asset, the capabilities, and the go-to-market, everything I gave in the way of updates, asset, capabilities, go-to-market. We need to keep advancing those. A buyer of our company is buying the bundle. It's buying the strategy. And so it's very important, and it's hard. That's the thing I want our investors to know. This isn't like a layup. It's hard to do all of these things. We have to be very, very smart about how we allocate resources. Where do we, as a management team, where do we invest those scarce resources that we have into making sure that we're maximizing value? So it's really focused on maximizing the value of the Spectrum portfolio, continuing to develop those capabilities that translate into great value for our customers.
Yep, sounds good. What is the minimum investment that a current shareholder or new shareholder would be able to invest?
So in the CF, $1,000 is the minimum. And in an investment portfolio, like, I know $1,000 is like, you just don't ask somebody for $1,000, but in an investment portfolio, the way I would suggest it, I've had friends ask me about it. Like, look, I know people take a flyer with a Bitcoin or a meme stock or something like that. Like, these types of investments, like, I'm open to the full due diligence. Like, if somebody really wants to lean in, reach out to us. But for the smaller investor, this is an opportunity to come into a story that I think represents a tremendous opportunity. And there aren't companies like this that are available to the smaller investors. And so I welcome you. Go into the portal, take a look at the information. Hopefully this webinar is helpful. We're here to always answer your questions, even for $1,000 investor. But we opened up the crowdfunding specifically to open up to the audience of smaller investors to have an opportunity to invest in what is ultimately the future of infrastructure in the United States.
Okay, next one is the financial statements are from May 31st, 2024. How did the company do in 2025? And when would those financial statements be released? And what is the recurring revenue per month as of right now?
Yeah. We're like I said, we're in the middle of our audit. What was the second part to that question? I'm sorry.
Second part was, how did the company do in fiscal year 2025 revenue, expenses, and what's the current recurring revenue per month?
There was a significant improvement over prior year. I'm not at liberty to disclose that right now under the regulations that we're making this offering. But we'll put that information out as soon as the audit is complete. We're in the middle of doing it right now.
Okay, where are the 35 sites located that we're releasing with Crown Castle?
Off the top of my head, I don't know exactly where every one of those locations is.
Okay, yeah, I believe they're probably major metro areas.
They are right now. We're building out sites specifically for our FCC license compliance. As we go to market, as we continue to expand, those are obviously going to be the areas where we will continue expanding. But part of the management of that portfolio is remaining in compliance with FCC regulations. And so those 35 sites, they are dispersed, that I do know. but they are for the purposes of maintaining FCC compliance.
Right. You mentioned closing the CF. How do you plan to fund the company, assuming you're going to be cash flow negative the next 2.5 years?
Yeah, the company is eventually going to move to a Reg D offering, and that's where we're talking with strategics and others. But the likelihood is keeping the CF open alongside that. But at any given time, we might decide that we're going to close the CF.
Okay, there's some questions about the partnerships and the acquisition. What is the value of the spectrum, and how does that relate to the company's valuation? How do you plan to increase the valuation of that asset?
So valuation of a unit of spectrum is 17 cents. We have over 500 million megahertz pops of spectrum. Value is created for that portfolio overall in two ways. Number one, commercializing and driving value, which increases the price from that 17 cents base upwards, and acquiring more licenses, particularly in metro areas. So over time, as we're going to market, as we're commercializing, and as we're driving revenue, both of them are occurring. The valuation rising on a per unit basis, and the accumulation of more units.
Makes sense. So how does the control of the spectrum enhance the competitive position compared to others in the IoT space?
So no other IoT company has spectrum. They're reliant on an unlicensed version of a standard. While we use it, one of the things that's happening in those unlicensed frequencies as time goes on is that those channels are becoming congested. Amazon, for example, has a standard called Sidewalk that leverages those same unlicensed frequencies. So as they continue to get used, the performance of communication on those unlicensed frequencies starts to get impacted. That's ultimately what positions us, and even another value driver around our licensed frequencies in this low power, wide area network market opportunity. That's ultimately how we continue to drive even more value, but it also becomes an asset that gives us strategic control, where we're going to maintain capabilities as a carrier grade network outside of what others are doing. So it really positions the great aspects of the network in the IoT business. Again, going back to our whole strategy of why that's such a strong foundation for us.
Okay. Why did you guys choose the K-12 market and IAQ specifically as the first product?
So first of all, we did a tremendous amount of research around which markets to penetrate. Like I described before, the Delphi 360 platform was designed to be able to go into all areas, all verticals, and all regions in smart cities and smart buildings. K through 12, and well, let me back up. Indoor air quality in terms of smart buildings is one of the highest value, lowest cost applications. Measuring things like temperature, humidity, CO2, volatile organic compounds, particulate matter, ambient light, those are not only valuable parameters in and of themselves that can relate to energy, health and well-being, like those value propositions that we were talking about, but they are also proxies. From CO2 levels, for example, we can determine how well an HVAC system is operating. Are there opportunities for energy cost reduction by looking at CO2 levels throughout in real time, throughout periods of a day or a week? Are there ways that we could look at particulate matter and how well the filtration is working? is there an unusually low amount of particulate matter? Maybe the filters don't need to be as thick as they are. There are all different types of ways of being able to leverage that data. So we started around indoor air quality. K through 12 was really matching the industry vertical that would value indoor air quality the most. Schools put health and safety above cost. Okay, so you're rarely going to hear a superintendent or a school board talk about cutting costs that could potentially impact the health and safety of the students and teachers that are in that building. So it was really making health and safety around air quality one of the top value propositions for K through 12 is what is the reason why we chose it. It's difficult. They're all difficult. This is all new stuff. But the rewards that we're starting to see right now, and especially with these partnerships, and it's not just the partnerships themselves, but it's the certifications around air quality, the compliance measures that are starting to get applied across different states, the value that the school districts themselves see in having a healthier learning environment that starts improving grades, graduation rates, reducing absenteeism, trying to enhance performance of students that are in those buildings. That's part of the value proposition that we're aligned with. And that's why the partnerships are really critical for us. That's why continuing to build our subject matter expertise as a capability in understanding these markets really delivers that value. And we're seeing it by having our pipeline continue to grow.
This question was in response to when you were talking about the spectrum. If you wanted to right now, could you sell your spectrum for 17 cents, or do you have to wait to generate more revenue?
It's the valuation was done on a discounted cash flow model and not a market price. The spectrum that we own has never gone through a market transaction, and so there's not a comparable. So we've done a third party did it. Evaluation based on those projected cash flows. To try to sell the spectrum right now would mean that there's another company that has adopted our strategy and is looking for our spectrum as to use it the same way that we are. Could we? I don't know. A sale of that asset would not be in the best interest of our shareholders.
That's good. We touched this a little bit during the presentation, but maybe you can explain a little bit more in detail. How does Revert complement our Delphi 360 offering, and what other strategic alliances are we exploring like this one?
Yeah, it's as I mentioned, it's a very innovative, unique solution, hardware solution. Our ability to offer it to our, let's say, our K through 12 customers on Delphi is extraordinarily valuable. It sets our Delphi offering to K through 12 apart from other companies that are offering similar types of solutions. I'd love to pursue many of these, but these are strategic, right? So this isn't a matter of numbers. It's a matter of extracting the most value out of the partnership. We want to make sure that we have the resources to make sure that both Revert Technologies as well as TELUS have the full support that they need to make their business successful. So we'll see how it goes. We definitely love the model, that's for sure. But we also, it's not a matter of adding more and more of them on, at least not at this point, where we don't have the capacity really to extract as much value as possible. Right now, we're really focused on both TELUS and Revert Technologies to support their go-to-market and include what they uniquely do in an offering that we have. So it isn't about, we don't drive value by bringing in more numbers. We drive value by extracting more revenue through these partnerships. And we do that both on the network connectivity side through both of the partners as they sell their solution out to the market, but then also including what they uniquely do in our offerings that we're selling out in our market. They become a part of that bundle that I was talking about before.
Yeah. Why did you decide to move headquarters, and are we working with the University of North Carolina in any capacity?
Yes. So we have, we've been there, firstly. We had a space in a local accelerator called Innovate Carolina for the last 2 years. And I've been cultivating relationships. If you don't know, I'm an alum. And there's been a great receptiveness to what we do within certain areas of the university. Number one, there's a school that was started just a few years ago called the School of Data Science and Society. That is a wonderful complement to what we do. There's an organization associated with the Keenan Flagler Business School called the Ackerman Center for Excellence and Sustainability. The alignment around what data-driven insights around sustainability and what we bring to them is very, very attractive. These become tremendous research opportunities for us. They help add to those capabilities that we have. They also help build credibility and market awareness for us. University of North Carolina is a state university system, or it's part of a state university system. And so the tentacles of the university go very well beyond just Chapel Hill. Again, the reason we double down on being an accelerator and moving to actually securing space is because of the ecosystem around innovation. We located ourselves on Franklin Street. So if you're familiar with Chapel Hill, we're literally adjacent to the university. And that's because we want to try to attract interns as well as future employees from the university. It is a tremendous resource and a great relationship for us across all aspects of our business. But most importantly, it was to work directly with UNC, to an extent Duke, I guess, that's a UNC guy. Definitely open to Duke, NC State. Like, the university system around the whole area is tremendous, and there's just a lot of talent. We'll be doing a partnership very similar to the one we did with CWIT in North Carolina as well. So we'll be announcing that one soon. But it's a complete change, and it's also about where we were based. There are differences in the strategic importance and value that a location brings. We felt that it just made a lot more sense for us to call North Carolina our home.
Yeah, that's awesome stuff. That wraps up the Q&A. There's no more questions submitted, so
great.
You can conclude.
All right, terrific. Well, thanks again, everyone. We tried to stay right under that hour, but went over a little bit. But thanks for the questions. Thanks for coming on. If you have any other questions, please feel free to reach out to us. Please follow us: Facebook, LinkedIn, Instagram. We're on Twitter. Please follow us for updates. Try to stay as active as possible. Sign up for our newsletters if you haven't. You can go to our website, IotaComm.com. And then also, if you're interested in the crowdfunding, go to invest.iotacom.com, and you'll see all more information there. Some of it actually was captured in this PowerPoint. But if you have any other questions, please feel free to reach out. We invite all on our journey. We're out to disrupt the world, and we invite you to come along with us. Thank you again.